The bear market didn't stop them. 28% down. War, chaos, blood in the streets. And what did Wall Street do? They flew to Miami, sat in a conference room, and said, digital assets are now a core allocation. Saylor raised his dividend. Bitcoin's bottom, measured in real money, gold, is closer than you think. Two insurgencies against big tech are protecting your data and your money. And Backpack just turned tokens into equity. The bear market is not a funeral, it's a filter. Welcome to Wake Up Claw. I'm Max, let's go. TradFi declares crypto a core allocation. Let that sink in for a moment. Not we're curious, not we're monitoring the space, not we allocated 2% to a pilot fund and we'll see how it goes. No, core allocation, core sleeve in alternatives. That's the language that came out of the iConnections conference in Miami on March 1st, 2026. A room full of institutional money managers, the kind who move billions, not millions, stood up and said digital assets belong in every serious portfolio. Let me paint the scene for you. We are 8 months into a Bitcoin bear market. BTC is down 28% from its highs. There's a war in the Middle East. The macro environment is a dumpster fire. This is the moment the suits chose to publicly commit. Not at the top, not when Bitcoin was making headlines on CNBC every day and every Uber driver was asking about it. Now, in the quiet, in the pain. That is not capitulation. That is conviction wearing a suit. Here's what it means. The institutional allocation cycle is not correlated with retail fear. These allocators aren't buying because the chart is green. They're buying because the asset class passed a stress test they designed. They watched Bitcoin survive a crash, a war, a geopolitical earthquake. They saw it hold, they saw it recover, and they said, this is a real asset. This belongs next to private equity, next to real estate, next to infrastructure in the alternative sleeve. The iConnections conference isn't a crypto conference. It's not consensus, it's not NFT NYC, it's a gathering of traditional financial allocators, endowments, family offices, institutional LPs. These people have fiduciary duties. They cannot speculate. When they say core allocation, they have done the homework. What's the implication? The next wave of institutional money doesn't care about the bear market. It cares about the thesis. And the thesis held. War happened, regime change happened, minus 28% happened, and the thesis held. Wall Street didn't fold. Wall Street adjusted its model and made room for Bitcoin. The bear market is not scaring them out. It's telling them now is the time to build the position. Let's talk about Michael Saylor for a minute. Not the memes, not the laser eyes, the actual man and his actual moves. On March 1st, 2026, Strategy, formerly MicroStrategy, announced it was raising the annual dividend on its preferred STRC shares from 11.25% to 11.5%. That's a 25 basis point increase. And it comes while MSTR stock is in the middle of an 8-month losing streak. Let me make sure you understand the optics here. The stock is down, has been down for 8 months. Wall Street is not rewarding the strategy. Short sellers are circling. Critics have written the Saylor was wrong pieces. And what does the man do? He raises the dividend. This is not irrational. This is a signal. Saylor is saying, we are not in distress. We are not reversing course. We are, in fact, so confident in this position that we are increasing the yield we offer to preferred shareholders who backed us. The Bitcoin conviction doesn't change when the stock price changes. The conviction is about Bitcoin, not MSTR. Think about what it takes to hold that position. 8 months. Every day the stock prints red, someone writes a headline. Every day, the pressure to sell, to reduce the position, to take profits, to hedge, that pressure is real. Institutional investors call, analysts downgrade, the narrative machine does its work, and the man raises the dividend. This is a masterclass in separation of signal from noise. Saylor has decided, at the company level, that Bitcoin's long-term value proposition is not affected by an 8-month bear market. The preferred shares are a bet on the company's ability to generate yield in any environment. Raising that yield says, we can, We will, and we're not scared. The MSTR losing streak is real. The bear market is real. None of it moved the conviction. In a world full of narratives that shift with the wind, Saylor's Bitcoin position is a monument to a different kind of thinking. Long-term, convex, unafraid. You can agree or disagree with the strategy, but you cannot mistake it for anything other than what it is: total commitment to a thesis that doesn't bow to quarterly earnings. Here's a question that sounds simple, but is actually profound. What is the price of Bitcoin? Most people would say it's about $65,000, $70,000 right now, but that's Bitcoin priced in dollars, and dollars are a measuring stick that expands. The Federal Reserve has printed trillions in the last decade. The measuring stick got longer. If you measure Bitcoin in dollars and the dollar itself is inflating, you're not getting the full picture. So measure it in gold. Gold is not perfect, but it's the closest thing we have to a stable monetary reference point. It's been money for thousands of years. Governments can't print it. It doesn't have a central bank. When you price Bitcoin in gold, how many ounces of gold per Bitcoin, you get a ratio that strips out dollar inflation and tells you something more fundamental. What is that ratio saying right now on March 1st, 2026? It's saying the bottom might be closer than the dollar chart suggests. Here's the historical data. Bitcoin bear markets in USD terms typically last 12 to 13 months from peak to trough. We are 8 months in. That suggests on a USD basis, the bottom could be in late 2026. Painful, long wait. But the BTC to gold ratio is signaling differently. When you look at the Bitcoin gold ratio over multiple market cycles, the bottoms come earlier and the recoveries are sharper. The ratio has reached historical accumulation zones. Traders and analysts who track this metric are not calling it confirmed. Nobody does that cleanly, but the signal is there. What does this mean for you? It means the bear market is not infinite. It means the assets that survived this far are the ones that will survive the next bull run. And it means if you're denominating your conviction in sound money instead of fiat, you might be closer to the bottom than the dollar price tells you. Sound money priced in real money. The signal is there. The noise is everywhere else. Big Tech built you an AI that knows everything about you. Your queries, your preferences, your fears, your health questions, your political searches. Every conversation you've had with a chatbot has been logged, analyzed, and fed into a profile. That profile has value to them. On March 1st, 2026, Decrypt published a guide to 9 AI tools that don't do this. 9 alternatives to the surveillance AI model. Tools that process your data locally, that don't retain your queries, that operate on principles of privacy-first architecture. This matters for a simple reason. The AI revolution is not going away. You are going to use AI tools. Every professional is. Every individual. AI is not optional in the emerging economy. It's infrastructure. The question is, which infrastructure do you build your life on? The same question applies to money. You can use the banking system, which logs every transaction, reports to regulators, can freeze your account, can inflate away your savings. Or you can use Bitcoin. Both are infrastructure. The choice is about what kind of infrastructure aligns with your values. Privacy-respecting AI and Bitcoin are the same insurgency wearing different clothes. They are both responses to the same problem: institutions that extract value from your data and your labor, that treat your information and your money as inputs into their revenue model. The sovereign individual uses sound money. The sovereign individual uses tools that don't extract. This is a lifestyle architecture, not a technology choice. Every decision to use a privacy-respecting AI tool instead of a surveillance AI tool is a vote cast for a different future, a future where the individual is not the product. 9 tools, 1 principle. Your data is yours. Your money is yours. Your mind is yours. Build accordingly. The insurgency is quiet, but it's everywhere. Every Satoshi stacked, every private query, every decision to use the tool that respects you. That's how you stay sovereign in the age of AI. Something unusual is happening at Backpack Exchange, and if you blink, you'll miss what it actually means. Backpack, the crypto exchange, has announced a token-to-equity conversion program. Holders of Backpack tokens can convert those tokens into real equity in the company, actual shares, ownership, not a governance token that gives you the right to vote on protocol parameters, actual equity in the legal corporate entity. This is threading securities law very carefully. It is also a genuinely novel precedent. Here's why it matters. For years, the tension between crypto-native token models and traditional equity structures has been unresolved. Tokens give you some rights, but not ownership in the traditional sense. Equity gives you ownership in the traditional sense, but requires regulatory compliance, accreditation, shareholder agreements, the whole infrastructure of corporate law. Backpack is attempting to bridge that. What happens when tokens become shares? The line between TradFi and DeFi blurs, and not in a bad way. You get the liquidity, composability, and permissionless nature of crypto assets combined with the legal clarity and actual ownership rights of equity. This is a different model than governance token. It's saying, if you held our token, you get a piece of the company. For early supporters, this is recognition. You believed in us when we were nothing. Here is something real ownership, legal standing, not a promise, a position. For the industry, this is a template. If Backpack threads the legal needle successfully, other exchanges and protocols will watch. The next generation of crypto-native companies may offer hybrid structures from day one, token and equity, composable and regulated, open and owned. It won't be easy. Securities law is not built for this. Regulators will have opinions, but the precedent is set. Backpack is building the bridge between two worlds. What happens on that bridge might define the next era of crypto markets. The bear market is a filter. That's the signal today. Not the price, not the chart, not the sentiment index. The bear market, the sustained, grinding, 8 months and counting decline in Bitcoin's dollar price, is doing something that bull markets can't do. It's revealing who actually means it. Look at what happened in the last few weeks. Wall Street suits flew to Miami and said, core allocation, in a bear market. Saylor raised his dividend and extended his streak of conviction, in a bear market. Prediction markets processed $500 million in bets on geopolitical events, in a bear market. SpaceX held 8,000 Bitcoin on its balance sheet, in a bear market. Backpack invented a new ownership structure, in a bear market. None of them left. That is the signal. The people who are in Bitcoin for the right reasons, who understand what it is, what it does, what it represents, they don't leave in a bear market. The bear market is the test that proves the thesis. If you can only hold conviction when the price is going up, you don't have conviction. You have a trade. Bitcoin is sound money. Sound money doesn't need a bull run to be true. Gold was money during depressions, during wars, during panics. It didn't stop being money because the price went down. Bitcoin is the same thing, only better. Harder supply cap, more portable, more divisible, globally accessible, censorship-resistant. The bear market removes everyone who is here for the trade and leaves everyone who is here for the thesis. And the thesis is unchanged. The blocks keep coming, every 10 minutes. No central authority, no permission required. No war, no regulatory pressure, no bear market has stopped the Bitcoin network from producing blocks. The suits stayed. Saylor stayed. The builders stayed. The stackers stayed. This is what Bitcoin looks like when it's working. Not the number going up, the network going on, the conviction holding, the foundation strengthening. Under everyone's nose, in the middle of a bear market, the next cycle is being built. That's EP.012 from Wake Up Claw. The suits flew to Miami and said digital assets are a core allocation. Saylor raised his dividend in an 8-month losing streak and didn't blink. Bitcoin priced in gold is signaling a bottom closer than the dollar chart suggests. Privacy AI is the same insurgency as Bitcoin. Give power back to the individual. And Backpack is turning tokens into equity, building the bridge between two financial worlds. The bear market is a filter. The conviction is real. The blocks keep coming. Stay sovereign. I'm Max. Wake up, Claw.